morning, good evening, good afternoon, students and traders. This is FXFreedom broadcasting you live on YouTube. Hopefully, can you hear me, everybody? Can you hear my voice in my screen? This is a sound check, everybody. Sound check, sound check. Trader Dancy, can you see my screen and hear my voice? Hopefully. Okay, very good. Everybody, this is Forex Trading Course 101. Remember, trading is a learnable skill when we learn in the correct way the three pillars. Pillar number one is the market, and we're trying to learn about the market with those modules in here. Pillar number two is the strategy. We are trying to learn about the strategy in the advanced module, and the big one is called the trader. Talking about the trader more in the Forex course 202, also called the institutional traders course. And talking about the trader, what do champion traders always say? Champion traders always say that I am not going to live and die on a trade by trade basis. And of course, this is a quote from Mark Douglas, and my 50 cents on the left: when the market scares you, don't be afraid to do the right thing. What is the right thing to do, everybody? Follow the rules, follow the concepts, okay? Enter one more time, improve your strategy. And remember, 90% of traders lose money in the Forex market worldwide. Risk disclaimer, the webinars are not trading or investment advice. The webinars are for educational purposes only. Either way, don't trade with money that you cannot afford to lose. And for questions or homeworks, you have my Gmail contact, my Skype contact, and you can follow me on TradingView. That being said, everybody, file and open. Class is here. So candlestick, Japanese candlestick, bullish candlesticks in a downtrend, right? Bullish candlesticks in a downtrend. So in the last lesson we are talking about the rules and the concepts. Remember this lesson, everybody? Two traders, one was obeying the rules, the other one did not. What happened? And we talked about study the charts, do this exercise, what is going to happen, right? And clone, and let's go on NZD CAD, right? NZD CAD daily chart, NZD CAD daily chart, everybody. So Japanese candlestick, bullish candlestick in a downtrend. Now somebody's going to ask, teacher, so far you've been telling us that there is a concept, there is a rule that in an uptrend I'm going to only buy and buy only bullish candlestick formations, and I'm never ever going to short bearish candlestick formations. And then you told us that in a downtrend I am going to short, I am going to sell bearish candlestick formations, right? And I'm never ever I'm going to buy bullish candlestick formations. Agreed, everybody? So today's lesson is bullish candlestick formations in a downtrend. Why? One of the previous lessons was that, so it's a trading slash charting, trading charting concept, okay? Candlesticks formations. Candlestick formations are reversal patterns too. Okay? Candlestick formations are entry patterns, so candlesticks formations, candlestick formations, everybody, Brazilian guy speaking English, candlestick formations are entry signals, but also candlestick formations are reversal patterns. Okay, everybody? Got you, boss. Thank you very much. So the previous 4 lessons was about the rule that in an uptrend I'm going to buy candlestick formations and I'm never going to sell bearish, or in a downtrend I'm going to only sell bearish candlestick formations and I'm never going to buy. And we are talking about candlestick formations as an entry signal. It is now the right time to enter. Okay? But today's lesson is not about the candlestick formation as an entry signal. It's a candlestick formation as a reversal pattern. What are we talking about? So if this is the market wave, extension, retracement, extension, just an example, and we're going to do the job on NZD cat, extension, retracement, extension, down market wave, and you are going to see the change, right? Forex course 101, those are one of the first lessons, how to identify a change, right? We said, well, you are going to see the change in the short-term trend. Where is the extension, end of the retracement, start of the extension? Make sense? Hello Allah, how are you? And how we are going to identify this, everybody? In a downtrend, right? Talking about the red one. Market making lower lows, lower highs in a downtrend. How we are going to pay attention right now, because this is the most crucial part, everybody. In a down market wave, how we are going to identify potential reversals is in a down market wave. So how to identify that maybe the extension is over? Okay, maybe the extension is over. We are going to see a bullish candlestick formation in a downtrend. Make sense, everybody? Freedom, can you repeat, please? Yes, sir. In a downtrend, talking about the red one, not the blue one, not the lower lows, lower highs, talking about the red one. How we are going to identify that maybe, because we need a, boss, why maybe? Because we need a confirmation from the smaller time frame. Sometimes the market is going to show us on the smaller time frame that the market is not making lower lows, lower highs anymore, but start making higher highs, higher lows. And how we are going to identify this price action is with the bullish candlestick formation, okay, in a downtrend, the red one being the downtrend. Okay, everybody? Any questions so far? So we are not talking about the entry, we are going to talk about, whoop, maybe it's time for me to get out. I'm shorting the Fibonacci, I'm shorting the MACD, I'm shorting the Ichimoku, I'm shorting the super mega JP Morgan Chase unicorn forex robot system. But if this happens, maybe it's time to get out. Make sense, everybody? Those are the, yes, it's a learnable skill, you need to practice, but those are the unnecessary losers. Make sense, everybody? Now, how this plays out on the live chart? We are on NZD daily. We're going to go NZD weekly chart, everybody. NZD weekly chart. Okay. So we are going to connect extension, retracement, extension, retracement, extension, retracement, extension. Alright? This is the market wave. This is the red one from the picture. 40%. Okay, everybody? This is this. Okay? So, from the weekly, yes sir, and the decade weekly chart. So, if you are shorting the market somewhere in here, or if you are shorting the market somewhere in here, or if you are shorting the market somewhere in here, make sense everybody? This is the blue one, market making lower lows, lower highs, lower lows, lower highs. You are shorting the market somewhere in here, and you are shorting the market in here, and you are shorting the market in here, right? Now, this is the weekly chart. Let's zoom in the chart, everybody. Now, you don't see the future, right? You don't see the future. You are shorting the market on the 1 hour chart, 2 hour chart, 4 hour chart. Okay? Now, you are shorting the market. And here we go. Is this, everybody, is this a bullish candlestick formation, this one here? This one? The blue one and the white one? Everybody? And now is this whatever, no, not bearish, is this a bullish candlestick formation? No, right? We need to see another one, exactly. Next one, okay? Is this a bullish candlestick formation? 1, 2, 3. Okay. So, if bullish candlestick formations are reversal patterns, okay, then we should see a change in the short-term trend on the daily. Make sense? Why the daily? Because the daily is the trading time frame, okay, and the weekly is the confirmation time frame. So we're going to go on the daily, and here is the market making lower lows, lower highs, lower lows, lower highs, lower lows, and then let's see, right? It's not a trend, right? Not yet, not a trend yet. Agreed, everybody? We don't know it. This is not a trend. You don't have two higher highs, two higher lows. You have one low, right? And then you have the first high. Make sense, everybody? So you don't have. So let's see how this is going to play out. 1, 2, 1, 2, sideways, higher low, higher low, higher low, lower high, and see everybody, there is no uptrend, not yet. Make sense? It made the first low on the daily, the first higher high on the daily, it made the first higher low, but we have no higher high. Okay? So back to business, weekly chart, back to business, back to business, back to business. One more, so let's get out of this, we don't see the future. 1, 2, 3, sideways, sideways, 1, 2, 3, bam. Now, is this a bullish candlestick formation? You can take the last one from the right, which is a bullish engulfing candle, everybody. So we are still shorting the market from the 1 hour chart, 2 hour chart, 4 hour chart. And fair enough, here it's difficult to understand and spot, well, maybe the market's not making lower lows, lower highs anymore. But this bullish engulfing candle, vertical line again, going on the daily, right? Can you see everybody what happened in here? Vertical line, this is the daily, this is the weekly, right? Weekly bullish candle. What happening? What is happening? Do we have a confirmed uptrend in comparison to the previous example, which was in here? And then the market was making lower lows, lower highs again, right? This was no uptrend in here. Make sense, everybody? FXFreedom, this is so difficult to understand. Well, give it some time and just remember and learn that bullish what is the lesson today? Bullish candlestick formations on the higher time frames are reversal patterns on the smaller time frames. Everybody? Okay, so trading concept, candlestick formations on the higher time frames are reversal patterns on the smaller time frames. If you can learn this, and this is a learnable skill, everybody, you can start to lose less. Make sense? Make sense, everybody? If you can learn the skill of identifying that candlestick formations on the higher time frames are reversal patterns on the smaller time frames, then you are going to start to lose less. Make sense, everybody? Meaning you are not going to short the market anymore in here. What happens to the trader who doesn't have this knowledge? The trader who doesn't have this knowledge is going to go on the daily chart, like in here, is going to see something like this, and is going to short the market. Agreed, everybody? Because this market may be sideways, or this market it's not making higher highs, higher lows anymore. Make sense, everybody? From the weekly standpoint, the trader who doesn't have this knowledge is going to short the market in here. Counter trendline break on the weekly. You know, shorting the market because maybe we are sideways and we don't have higher highs, higher lows on the weekly. We still have, this is the lower low, this is still the lower high. Agreed, everybody? This is a high, this is a lower low still, and this is still a lower high. Now here is the most important thing for us to understand. This kind of trading happens also you looking at the daily chart. You are looking at the daily chart, you are seeing a bullish candlestick formation, bullish engulfing candle from the daily, and you are seeing a counter trendline break from the daily, and you are going to short the market on the 1 hour, 2 hour, 4 hour chart. Agreed, everybody? Why? Because we are not aware that this price action is happening down in here. When you are in an extension and you see a bullish engulfing candle on the daily, or if you see a bullish engulfing candle on the weekly, foreground, background color yellow, maybe green. Oh, let's change this one, right? Let's change this foreground color like this. Okay, there you go. Green candle Okay, bullish. Then, because candlestick formations are on the higher time frame, are reversal patterns, everybody, see in here? Somebody's typing, oh, but this market is sideways, but this market is in consolidation, and you have a counter trendline break. And the answer is yes, sir. But everything that you are seeing, it's happening in here. So probability wise, if you see this bullish engulfing candle on the weekly, because candlestick formations on the higher time frame are reversal patterns on the smaller time frames, you are going to see on the daily, if you are a great analyst, if you know how to analyze charts, you are going to see higher highs, higher lows. And if you short the market, everybody in here, tell me, what are you shorting? Are you shorting a downtrend or are you shorting an uptrend? Somebody's typing, oh, I see what you mean. Everybody, if you short the counter trend line break, the black one, okay, and it is a counter trend line break, yes sir, are you shorting an uptrend or are you shorting a downtrend? Type in the chat, uptrend, downtrend. There is no right or wrong, everybody. Make sense? Don't be scared, don't be shy. We are here to learn. But the market makes sense, right? Hedge fund trader Dancy, hedge fund trader Julius, hedge fund trader Ala. If you short the market with the counter trend line break, this one in here, are you shorting a downtrend or are you shorting an uptrend? Which one? Yes, everybody, I have a 20 seconds delay on the chat. An uptrend, exactly. And shorting an uptrend, is this high probability or is this low probability? Oh, but it's still sideways. Yes, it is. Yes, it is. It is sideways. But are you shorting an uptrend or are you shorting a downtrend from the daily perspective? Uptrend, uptrend, exactly. So if you short an uptrend, remember everybody, don't mix apples with bananas. We've learned this in the previous lessons, talking about consolidation, specifically consolidation up in here. It's quite different than consolidation down in here. Make sense? Going long or short, buy or sell up in here, it's a quite different story, different probabilities than down in here. Make sense, everybody? Where is the biggest chance to the consolidation to go up in here? Especially when you see a change in the short-term trend. And where, in the same question, where is the consolidation most likely to break down in here? Same price action, same pattern, same market movement, same... Make sense, everybody? Low probability, exactly. Don't mix, everybody, don't mix apples with bananas. This consolidation is different than this consolidation. For the traders who are yelling at me, oh, but we are still in consolidation. Yes, you are. But you are in consolidation down in here. Make sense, everybody? And this is why when something like this happens, 7 times out of 10, if you would short the market, what would happen? Oh, right. This is something maybe not the easiest stuff to learn, right? Because this needs to practice, study the charts, you know, have pivot point, support, resistance on the chart. Right, everybody? If you lost in the previous week and if you are losing this week, this is going to help you. Check your monthly, weekly, daily time frame and check your monthly, weekly, daily candle or candlestick formation, and you are going to see why you are losing. Make sense, everybody? Now, we all have losers time to time. Me too. Okay? Even though if you short the market and you lose in here, well, you must understand, wow, you know, loser, not a problem. We were sideways, yes we were, but we are not in a downtrend anymore. Make sense, everybody? The first two, okay, but when you have the third leg up, then it's game over. Meaning you must spatially see and understand that you are not in a downtrend anymore, and of course the market broke the sideways channel. So why is this skill so valuable to the professional traders, everybody? Is because with this skill, professional trader can identify as soon as possible that the market is not going their way anymore and it's time to reverse the position. Make sense? So this is one, okay, this was from the weekly, right? And then we'll make up. Okay, let's make from the daily, right? Daily and the 4-hour chart. So now we are on the daily. Next example, we are on the daily in here, shorting the market, you know, and down trend line. We are shorting the market on the 4-hour chart, 2-hour chart, 1-hour chart. Makes sense? We're shorting the market and shorting the market still, shorting the market, you know, we are shorting the market and down trend line, right? Maybe not the perfect example, right? Down trend line, false breakout. Okay. So in here, see this, everybody? Candlestick formations on the higher time frame are reversal patterns on the smaller time frame. Tell me, everybody, if you see something like this from the daily, would you short the market in here? Yes or no? Candlestick formations on the higher time frame are reversal patterns on the smaller time frame. Would you short the market in here on the 4-hour chart, 1-hour chart, 2-hour chart? Boss, I don't know. Well, low, high, lower low, lower high. Would you short the market? One more, okay, fair enough. Bam. Would you short the market in here? Yes, the first leg, agreed, everybody, the first leg is difficult to spot, makes sense? But the weekly candles are important. Then yes, I would, yes, I will. Okay. Let's see how this is going to happen. Bam. What everybody, if you learned well the previous lessons, and if you didn't, please go back to Duca's Copy YouTube webinar page and watch the lessons 2 or 3 times. Why did you lose in here? You shorted the market in here, everybody, and it was like this, right? You know, why did we lose? Oh, but this is a counter trend line break. Yes, it is. But why the market pushed up? See, everybody, talking about candlestick formations. Okay, this entry in here, okay, this entry in here, it's not the same as this entry in here. Make sense, everybody? Those are 2 different entries. Make sense, everybody? Yeah, fair enough, they look like the same. Is that morning doji start? Ahmed, I'm not good at names, but we can check the, let me find the picture. Oh, let me find the picture. Let me find the picture. Let me find the picture, everybody. Let me find the picture. Bearish. There you go. Okay. Are you referring to bearish candlestick formations? Ahmed? Morning bearish shooting star, evening star, golfing. Morning doji star. Oh, you are talking about this one, the bull, right? Everybody, why the market pushed up? Okay, so if we draw a horizontal vertical line on our entry, and if we, now this is the daily chart, if we go on the weekly, see what did you short, everybody? Wow, right? See what did you short? When you short the market on the daily, you shorted this one, the blue one, but what is the previous one telling you? Candlestick formations on the higher time frame are reversal patterns on the smaller time frame. So when you shorted on the daily chart, you know, the market was telling us, oh, maybe we are ready to go up. So this is what I'm trying to tell you. This entry, it's not the same as this entry. Make sense? This entry, it's quite different. Now remember, counter trend line break goes on the daily, but this entry, it's quite different than this entry. Make sense? If you short the market in here, it pushed down. If you shorted the market in here, what was the previous candle telling you? Or the previous two, even better, right? Here what you have, up and down, down. So here you have a downtrend. Do you have a down, everybody? Maybe one more, right? One more to try to explain to you. Do we agree that this story, it's quite different than this story before we shorted the market? Do we agree that before we shorted in here on the daily, do we agree that this story, the green quadrant, the green rectangle, This one, it's quite different, just visually, than this one. Do we agree, everybody? That there is a big difference in price action on the smaller time frames too. Do we agree, everybody? Wow! Yes. One more, right? One more. Let's see. Let's find on the. Ahmed says around 8.3 daily chart. Daily chart around 8.3. I would say no. I would say no. Okay, one more, everybody. One more. This time, let's find a reversal. Okay, let's go here, right? Let's go here. Or maybe here, right? This is nice. Okay, let's go here, everybody. Let's go in here. Okay, of course, you don't have the crystal ball, right? Or maybe where would be a nice example? Or maybe here. This is the daily, right? Well, it doesn't really matter. Doesn't really matter. Okay, let's go in here, right? So this is the daily chart, and remember we are on the vertical line. Vertical line, vertical line. We are trading on the 2-hour chart this time. Where are we? Vertical line. There you go. You don't have the crystal ball, you don't see the future, right? We are shorting the market. Lower lows, lower highs, lower lows, lower highs. Downtrend line. Downtrend line, you know. Market wave extension, retracement extension. So we are shorting the market. And the devil is in the details. Yes, sir. Does it always happen like this? Yes, it does. Yes, it does. This is a trading concept. Candlestick formations on the higher time frames are reversal patterns on the smaller time frames. So it doesn't really matter short-term downtrend or down market wave. When you see a bullish candlestick formation in an extension, then lower your risk and pay attention. Make sense, everybody? Lower your risk and pay attention. Okay, so we are here shorting the market on the 2-hour chart. 1, 2, right? 1, 2. Not a counter trend line break. We're going to wait for the counter trend line break to go short. You know, maybe one more. Maybe one more, you know, count. We want to short the market. We are still shorting the market. No. Counter trend line break. Maybe. There you go. You know, there you go. 1, 2, 1, 2, 3. Who in here? So we are on the 2-hour chart. Past resistance in here. And you see something like this, right, everybody? Okay. Now you are going to short the market, right? Agreed? And then what is going to happen? The market is going to fall and short the market in here. 2. Where is the downtrend line? There you go. We're monitoring markets making lower lows, lower highs. And 1, 2, right? We won once, we won twice, and then is the next one, right? There is the next one. Shorting the market again. And 1, 2, 3. Whoops. Seeing this one, everybody? Shorting the market, shorting the market. maybe not the best one. 1, 2, 3. 1, 2, 3. There you go, right? 1, 2, 3, 4. Maybe not the best one, but somebody would short the market in here, right? Yeah, this is easy to spot because it was aggressive, but when the market is kind of, it's waving up with the deeper retracements, it's a little bit difficult to understand, right? So somebody would short the market here, counter trend line break, and let's see how this is going to play out. Now, there you go. Who in here wants to short the market? Counter trend line break. Everybody, would you short the market in here? Right? It's making lower lows, lower highs again. Would you short the market, everybody? Now, some of you are honest. You're going to say, well, maybe yes. Some of you are quiet. You're going to say, well, not me. Now, it really doesn't matter, okay, if you say yes or no. If you would short the market right now in here, we are on the 2-hour chart. What is the confirmation time frame? We learned in the previous lessons, before you enter the market, check the confirmation time frame. Check the confirmation time frame, yes sir. Right? If you are entering on the 2-hour chart and it's okay, what is your confirmation time frame? The daily, exactly, the daily. So if you short the market right now, because the market's making lower lows, lower highs, it was making, right? So it was making lower lows, lower highs, lower lows, lower highs, everybody, agreed? On the 2-hour chart, and then start to make higher highs, higher lows, agreed, on the 2-hour chart. And then it broke a counter trend line and start to make lower lows, lower highs again on the 2-hour chart. But if you are listening to teacher FXFreedom here, and is telling you and is pushing your ears, before you enter, check the daily. Check the daily before you enter, check the daily. You know, I'm kicking your ass, right? I'm arrogant. You know, I'm rude to the traders, right? Some of you are in the private group, private mentorship, and I'm rude to you, right? When you short the market, right? What are you shorting right now? Oh, what do you see? Somebody's typing, oh, what do you see from the daily? And if you want to zoom out, what do you see from the daily? You are shorting a downtrend on the 2-hour chart, like you were shorting consolidation on the daily in the previous example. So yes, you are shorting a downtrend on the 2-hour chart. You were shorting consolidation on the daily, but from the higher time frame perspective, because candlestick formations on the higher time frame are reversal patterns on the smaller time frame. What are you really shorting? Bullish candlestick formation, there you go. What else? Higher lower low, lower high, lower low, higher high. Bullish candlestick formation plus higher high. So we are on the short chart. Now this is a probability profession, everybody, makes sense? It's a probability game, for the lack of a better word, but 7 times out of 10, not always, 7 times out of 10 these setups. So here we won, right? But 7 times out of 10, let's find another one. Let's find another one. There you go. See how this works? See how this works? In here we won, and this is the danger of the beginner trader learning how to trade. He would say, oh, this market should push up, right? And it didn't. But 7 times out of 10, you know, we are going to do something like this. So you are buying bullish candlestick, you are shorting bullish candlestick formation high from the daily, and the market pushed down. Then on the next one you are going to see something like this, and you are going to short again because the market pushed down in here. You are going to think, well, the market is going to push down in here too, and 7 times out of 10. So this is the 1, 2, 3. But this is one of the 7 times. The market is going to reverse, right? See, everybody, how this works? And every single time, maybe this is not the best example, but this one would be better. You know, you were shorting something like this. And again, it's challenging, right? Because in here the market was kind of sideways, right? So here it's difficult to understand what is happening from the higher time frame, but this entry may be a better example. If you go on the daily, so this is difficult to spot in the beginning, and the market also went down, you know. But this one, right, this is maybe the best example. You are shorting on the 2-hour chart again, you know. You are shorting here and you are shorting here, and the market did went down, right? So you are shorting here, bullish candlestick formation, high, the market went down. You are shorting here, bullish candlestick formation, the market went down. But then you are shorting in here again. What happened? Everybody watch these lessons 2 or 3 times. Those are not the easy ones. Okay? And remember that you can predict this to a degree. Make sense, everybody? Before you short the market here, you should understand that the market on the daily, it's not making lower lows, lower highs anymore. It's making higher highs, higher lows. So, yes, it's not confirmed yet, but you have the first low from the daily. You have the first higher high compared to this one. You have the low, you have the first higher high compared to this one, and then you have a higher low. Make sense, everybody? And you short in here, this is a low probability trade. Oh, but it went down, I won. Yes, but you know, what happened in here? You won again? Make sense, everybody? Homework, study the charts, whatever currency pair you want. Okay? NZ, what? AUD USD, right? AUD USD, it's a nice. Study AUD USD on the weekly chart and try to get an understanding, everybody. See in here AUD USD. Study the charts on the weekly first. You have the market wave extension. retracement, extension, retracement, and extension, and try to figure out if you would take care of bullish candlestick formations in a downtrend. Okay, how would this help you? You are going to have one or two losers, but then you are going to understand that this market is not falling anymore, and maybe it's time to reverse the position. Okay, everybody, our time is up. See you back tomorrow. Until tomorrow, stay strong and trade for freedom. You want to be free, right?